Good afternoon, everyone. BC Ridgefield here, coming to you live from London, and 15 minutes later than planned, due to getting my first technical mess up of the year out of the way nice and early and sharing the wrong link. For anybody that's made it across on this link, absolutely fair play to you. And thanks for sticking around. So I'm going to just go back over this again. I did run the first part of the live stream, but obviously realised there were no viewers and that I've obviously done something wrong. So do let me know, guys and girls, if there's anything wrong with the visuals or the audio before we crack on. Bernd, my good friend, happy 2023 to you, and a huge and blessed Happy New Year to all of our listeners. Everybody, I wish you all an amazing New Year this year. I know 2023 was a real test for a lot of us, you know, myself included. I was caught up in the whole FTX thing, as I know a lot of people were, as well as the fact that it also wasn't just a particularly great year for people for a lot of reasons, which for me, although I'm not someone that kind of preaches this whole New Year thing, because I do understand what people are saying. It is just a date, etc. But you know what? If it works for you, if it's something that gives you that catalyst, if it's something that gives you that drive, then just use it, right? But let's all work really hard this year and try and realize everything that we really want. Annika, Happy New Year, bud, and Happy New Year to all as well. So, I'm going to go through this a little bit slower, give people time to kind of jump on the stream, and that numbers are building up now, which is great. So again, guys, I'm really, really sorry. A little bit of a technical issue on our end. I shared the wrong link, so it was for the webinar on Wednesday. Goldmax, Happy New Year, bud, and Happy New Year to everyone. So the plan for today is nice and simple. I want to take a look at BTC. I'm going to do you a top-down, how I'm viewing the markets here from the weekly down through onto the lower time frames. I want to take a look at ES, DXY, and I'll also be trading a lot more Forex with you guys this year as well, all right? And the same with the indices, right? So with ES, NASDAQ, bits and pieces. So I'm going to start covering them more on the stream as well, because I think as times get really, really turbulent in crypto, more liquidity comes out of the market. Also in, you know, a beta risk asset like crypto, they will tend to have, or they will have a tendency to follow Bitcoin. I think it's really good for people to broaden their horizons into traditional markets, which I really want to show. AU, the great, Happy New Year, mate. I hope it's a really good one for you, and I hope it's a really good one for everyone. So let's get my avatar off of here. Let's get this full screen and let's start cracking on. Guys, if you've got any questions, please do pop them in the chat. We'll make time for it at the end of every session. Okay, and if we've got some time towards the end, then we can look at some altcoins as well. So let me zoom out quickly and show you what this is all about here. So a couple of things. One, this is an area that's been of interest for me since January, since a year ago, right? This consolidation here. Now, why this consolidation? Because we can clearly see here, right, that we've got something capping the market. So let's just pop a line across here, right? For me, this was a really, really key level, okay? And why was that a key level? Because we can see here as we've come up, we found resistance here, yeah? As we came up through this point, then we flipped it to support, all right? Then we've wicked down below it, but then when we had this big impulse move and close below here, which we can see with this bearish engulfing candle, that's ultimately then what sent us lower. Now, the next question for me is I see the market in terms of liquidity. I'm looking for highs, key lows, inefficiencies between the moves to draw price in, and then I'm looking for areas where I believe clusters of orders are sitting, or what looks like an attractive proposition for a large money account, a whale, smart money as you would have heard it called, you know, basically institutions, hedge funds. Where are they looking to get on board, and where do they want to move the market to in order to give themselves the very best entries and exits? So with that in mind, I'm looking quite often for resting liquidity, all right? So the other layer that I just want to add for you guys is this low, okay? So let me just zoom in on this so you get the full context. Now, obviously, when we started this move here, we've come out of this, and this is on Bybit, right? Okay, so who I'm trading with. So that's as far as the data goes back. Obviously, we have a lot further data if you're using the indexes. Now, this consolidation that we had here, when we had this breakout, we didn't get a retest of this area. So this becomes of interest to me in terms of what could be drawing price lower. Now, we see these two very, very thin down close candles here, right? Now, these are the down close candles before the move higher. So originally, when we've come into this level here, this is very much of interest to me, the top and the bottom of this. Now, what we'll see is similar with this one. When we've lost this key level here, We've then come down to this. And now we've dropped into this. We've found some buy orders, which has allowed price to stabilize. Then it starts to move higher. Now, I'm not going to go into this too much on the weekly, but like I was saying, when I'm talking about price, I'm looking for where price is searching for liquidity, right? Now, it's found it in these orders here, this area, this order block previously, this consolidation. So I'm just going to draw that up and pop that in green for a second so we can visually conceptualize what this is doing, right? Price is basically digging into here, finding a number of buy orders. So why are there buyers down here? It's a historically significant level. There's been buyers there before historically, which was led to this huge impulse move higher here, okay? The other side of it is that people that were short from up here or even higher up, getting down to this clean level is a good place for people to take profit, right? Now, I don't really see people talking about that enough or really kind of thinking about that factor. People tend to think that when price comes into a level, it's just buyers stepping in and then sellers countering or vice versa. But actually, there's a lot of different things that make up that buy and sell pressure, right? The size of the players that are involved in the move, right? But also the nature of the orders, right? If you're triggering stop losses, for example, so let's say we bring ourselves up above this high here, then what you've got above this high will be a lot of stop losses, right? So what do those stop losses look like? So these stop losses will only look like one thing, all right? And that's buy orders. Because you've opened a sell position here, yeah, or down here. You naturally put your stop loss above the swing higher here, yeah? Then when price is sold off, great, you're in profit, price is running down. But what you've got here are all the stop losses from people in that position. You've also got a number of other you've got a number, sorry, if I get my words out, of other orders in here, more buy orders. Why? Breakout traders, right? People that get to this level, see price come through it and go, right. So let's say from here, we came up to here and people are saying, okay, fantastic. We've had this move through now. I think the price is going higher. I'm going to jump on board here and target price further up, right? Only to see price do something like this and reverse back down. Now, why does it do that? Because whether you consider it smart money concepts, like with my old mentors, ICT, for example, I took his original mentorship and also studied his 2022 core content. And I know he's got a new course coming out now as well. Really interesting character, someone I advise everyone really kind of does some research into some fantastic concepts. And really for me, although I have a much broader view of the markets, aside from ICT's concepts, he taught me a hell of a lot about price action, right? And a lot of these phrases that you'll hear from me, fair value gaps, order blocks, bits and pieces, really are coined. He's coined those phrases. Doesn't mean they don't exist before. Larry Williams touched upon certain aspects, etc., and some of the old school traders, but very, very important in this industry for me to credit and give credit where it's due. And he definitely deserves a lot of that. So whether you're considering this smart money above here or whether you're considering this just large orders, really, whether you think of it like that, if you're a big player and you need to offload a lot of contracts, right, or you need to add a lot of contracts, then what you have to do is you need to generate that liquidity. Retail, people like you and I are jumping in with $10,000, $100,000, $1 million contract sizes seems like a lot, but it really, really isn't when these people are trying to shift multiple billions or hundreds and hundreds of millions. So if smart money wants to get short here, it wants to drive price a bit higher, because going short here, well, you've got potential resistance or support down here. So you've also got buy orders. So where do you realistically have your stop? You're not going to have your stop loss up here and then be targeting this, or even if you're targeting this, the risk to reward just isn't there, right? So that's where these moves get made in the market to generate liquidity, to trap traders. And a really, really good way of putting this, and someone I got introduced to recently from Trader SZ, who, by the way, is one of my original mentors, one of the guys I learned the absolute most from. And one of his original mentors, a guy called Trader Dante, another British trader, fantastic guy. And SMFX, an Aussie guy who I got introduced to recently, who's just an absolute ledge. The concepts are the same. Think about where you can cause the most damage. Where's the most hurt, right? If you can engineer a move to get price up to here, right, you've caught all these people offside, yeah? When price gets up to here, all the people that were correct in their assessment of going short up here have now been caught out as well, and you've generated a ton of buy orders, right? So why doesn't that move the market higher? Well, really simply, if you've got a player that wants to fill enough sell orders, they've just created a dump load of buy orders in here, And now what they've done is they've filled them all with their sell orders, and they've caught everyone offside, and the market reverses. All right. So that's how I'm looking at price across all and every time frame. All right. So with that in mind, right, I'm just going to delete this, and I'm going to delete this, because this is the area we're interested in, right? This is the low of that consolidation. That's currently supporting price. We haven't had a weekly close through this level, right? We can see price compressing here. But the real thing that I want to dive into you guys with now, before I digress too much, I hope that gives you a concept of how I look to trade. I'm basically looking for key highs, key lows, liquidity, and inefficiencies, all right? So the next thing I want to cover with you guys is what constitutes a swing high or a swing low for me. I'm using a 3-candle pattern, right? 1, 2, 3, right? If I'm looking for a swing high, the key for the swing high is that the middle candle is the highest and that it is flanked by 2 lower highs. Lower high, lower high. So that's our swing high. Here, swing high, lower high, lower high. Why am I interested in these levels? Because we often see reactions when we get to them. We can see here we have a swing fail, right? And then beautifully followed up by another swing fail here, which leads to the market correcting. Now, when the market corrects, most people say to me, well, how do we know where it's going to go? We don't know where it's going to go. All we can do is assume. Now, because we've got an overall bearish bias, our assumption is that price is now going to seek liquidity lower. So we look for key swing lows. Right now, this here for me is a swing low, because that's low is flanked by 2 higher lows. All right, so that would be my first point of interest. Below that, I'm then looking at this swing low and this swing low, right? So we can see as price takes liquidity up here, yeah, it takes the resting liquidity above these highs, it then has to search for liquidity lower down, all right? Price is then hunting for those stops to catalyze a move for a possible reversal, okay? So with that in mind, we want to now take a look at what price is currently doing and implying these so that we can look forward. Okay, so quick message here from Annika. The price might not be all that bullish in 2023, but knowledge, adaptation, etc. sure will be bullish, right? Absolutely. Great phrase. Love everything about that. The markets don't have to be bullish for us to make money, first of all. And if you're not hitting your rhythm, if you're not hitting your triggers, you're not on that, and your form, and you're not finding the markets very forgiving, or they're not for you. You know, they're not great swing trading environments. They're certainly not great positioning environments at the moment in crypto. So utilize that time to build. You know, our recent campaign at the Nest, the best time is now. The whole point of that was that, you know, utilize this time. The very best people aren't just sitting on their hands waiting for the bull run. Right, the best people are making sure that their skills are sharp, their knowledge is sharp, they're pushing forward and they're driving for better things. Right, every single year. I'm no different. None of the professional trading team at the Nest are any different, and I can't imagine many traders are. It's a very, very difficult industry for a reason. There's a lot of things that you've got to master, but like any industry, it takes a lot of hard work. There's no guarantees in this industry, as there aren't in any. But if you apply yourself, you have the right purpose, and you practice in the right way, effective practice, then I think you'll be amazed at what you can achieve. So, with this in mind and looking to build, what's a really, really simple kind of concept of how I'm looking at the market, how I'm looking to trade the market. So my top down is looking something like this, right? I'm focusing on recent price action. I've got my historical level here, right? So I know where this is, lock that in. Now, what I'm looking for here are a couple of things. First of all, I'm saying to myself, well, what's capping the market? Right? Stopping the market going up or stopping the market going down? Now, for me, that's this level here. And if we're looking on the downside, it would have certainly been this level here, right? Because let me draw this across for you. Before we had this big breakthrough here, look at this. This was the low that had capped the market. Price just could not close below that low, right? We kept getting reactions here, driving price higher. Then when we got this big impulse candle through, this big displacement, price came back up into this inefficiency, and it's just been flat since there. Now, in terms of what's capping the market to the downside, we've got this level, right? Our historical black level here. Or we could say we'd be looking at this, all right? So the reason I do this first is in my mind, I want to conceptualize, okay, well, where's the main targets here and here, right? So as much as we know that was capping the market, we're not interested in that at the moment. What we're interested in is where the liquidity is resting. So for me, or not for me, I'd say pretty hard to argue with this. We got liquidity resting above that high there. What other key highs have we got? We've got this. And these guys are making up our weekly levels, right? So let's mark these up, right? This is where we've got liquidity. Now, normally on my charts, you would see this symbolized as a black line with an LIQ showing that it's liquidity. Run this through with you in different colors. Sorry, I don't know why the mic just decided to go on mute there. Do let me know if you've got any issues, guys, with the audio. Is that still coming through okay? Check, check. Let me know, guys, if this has gone quiet for a while, or let me just post in the comments. Audio, everyone. I'll ramble on and I will just repeat if there are any issues. All right, guys, Mike just unplugged there or something for some reason, and now I can't see the signal coming back. But if there's any issues, just pop something in the chat for me, please, guys. Okay, now, legend. Thanks, Manny. Perfect. Yeah, I don't know why I just had a weird cut. So the reason I'm doing these in different colors is because I think it's a really good exercise. It's something that I go through with a lot of my mentoring students, and it really helps you just visualize these because it's very easy to get lost as you move through the time frames. Bernd, thank you, buddy. Yeah, lost you for a few seconds. All good now. Perfect. Do let me know if there's any issues going forward, guys. So these red lines are going to represent our liquidity, right? So what do they represent? Up here, we've got resting liquidity above these, and we've got resting liquidity below here. In fact, I actually think we got a sweep on this level, didn't we? Which is why we were playing those longs. Let's just re-familiar ourselves. 15,460.5, 15,440. Perfect. So this is our resting liquidity to the low, all right? Because we took that liquidity here, which caused this little kind of corrective move that we had higher, right? Now, we also have liquidity resting here, because again, guys, remember this is a swing low, right? It's flanked by two higher lows either side of it. So we can assume as we drop back down through the levels that there can be liquidity there. So right here, the other thing that I like about this is that we've got equal lows or relative equal lows, all right? So the reason for that is because they don't have to be exact. The key thing is if the market's been stopped twice in the same area, we look at that and we say to ourselves, okay, there's a chance that we get an even a strong reaction when we get down there again because we have obviously had buyers stepping in here, all right? So we've got those levels marked up. I hope that's nice and clear for everyone, really nice and simple. Basically, if price is running above here, we look for reactions. If we get a strong close and a retest, we look to trade it higher, all right? However, we wick above and close back within, we break down, we look to the lower time frames for market structure breaks, and then we look to trade it lower, okay? The opposite, obviously, of our sell side liquidity down here, we've got stops resting below here. If we travel down below this, yeah, and then we come back within this range, we look to trade it higher to the liquidity resting above here. However, if we hold the breakdown and we continue to drop, then we know where liquidity is resting lower down, all right? So we use this to generate our bias overall, which obviously on a weekly scale is bearish. Why? Because we've got lower highs and lower lows, all right? We need to take out this high here, yeah, realistically before we start building structure back to the upside. So now we're going to drop this down to a daily scale, right? And look, even when we drop this to a daily, how much more data we get, all right? So now you can see how it's really, really easy to get lost if we're not marking this up and we're not using these in terms of colors. Now we can see that our buy side liquidity is resting in these key areas, so that's fine. What we want to focus on is recent price action, right? Because unless we get a super breakout and things go a lot higher, then obviously what we want to know is what's happening before that potentially happens. So we can see that we've got our resting liquidity above here. Where else do we have resting liquidity? So we're looking for untapped highs and lows, right? So very simply here, all right, so we're going to mark this up and let's do this in blue. Okay, and we'll make it a bit thicker as well so they really stand out. So our daily lines are going to be in blue, guys, all right? So as we can see, there's also this. And, oh, gone a bit early there. Although you can see the swing fail there that led to the corrective move on price. So we've also got this. So we look at this as kind of like a cluster of liquidity, really. And now we can see price kind of moving up, drawing up towards that. Now, obviously, when we're in a range, we're in a point of consolidation, yeah, then we're going to get a lot of these areas of interest. So for me, one that I've got my eye on at the moment is this, which we can see we're currently interacting with at the moment. Now, the other thing that we want to do is mark up our sell side liquidity, right, which we can see down here. Now, what we can see, and if I take you to some other areas as well, is that when these key highs and lows get attacked, yeah, we've got a situation with this one here. You see price comes into this, takes liquidity above, has a corrective move lower. Where does it go to? The sell side liquidity, right? Takes the buy side, heads to the sell side, okay? We can see plenty of examples of these as we look along in here. And obviously we've been in some relatively choppy price action. So that is what we're looking for. We're saying to ourselves, where is price likely to head next? Has it taken liquidity on one side of the market? Is it heading for liquidity on the other side of the market? So what we want to employ for accuracy or to plug into our theory is our high time frame bias, okay? So what we can see here, we're basing on market structure. We've got our higher highs, higher lows heading into this. Price came in, took out liquidity resting above this high here, all right? And also the liquidity of this high closed back within, right? This long upside wick showing the sell pressure, right? Showing that when price got up there, orders were filled very, very quickly in the opposite direction. Now, as we discussed earlier, that's done a couple of things. That's trapped a lot of traders here that were going long. Why were traders going long here? Because they were looking at these highs here, yeah, and rightly so. They see this impulse move through it. People don't necessarily wait for the retest, or on lower time frames, it looks like you've got a retest, but price runs away from you. It then sweeps, traps all these people here, and then sells off quite aggressively, right? Again, where's it selling off to? Yeah, key lows. So we first take out this low here, we then move in to take out this low, all right? And then we've come in and set this low here. Now, why did price stop there? Well, in my opinion, price was being stopped by this order block here. Okay, so let's just make that green so that that symbolizes the buy orders that sit in there. Okay, so hopefully you guys are all still with me on this. I hope it's not too dull for you, but just trying to get you and program you into how I'm looking at the markets and that kind of search for liquidity. So we've got our daily levels here, right? Now we've got this order block down here. We can see when price moved into this, what did it do? Took liquidity below these key lows, drove into this, and then look what happened. The wick comes up and the bodies of both of these candles close perfectly in line with the top of this order block, right? It could be coincidence. I don't personally think that it is. I think that it's jumped into there. It's all the people, smart money that are short up here, short in here, closing off positions into profit, causes this move back higher. Where are we looking for? Remember, like I said to you before, I'm looking for resting liquidity, I'm looking for order blocks, and I'm looking for inefficiencies, or as ICT would call them, fair value gaps, right? Which is here. So this is our FVG, right? So we're going to mark this in a lighter color. I hope you guys can see that, maybe make that a little bit darker. So when price breaks through here and we get into this liquidity pool, we're looking at this fair value gap, this imbalance, as an area that the market wants to rebalance so the market becomes efficient, all right? Now, as price is getting drawn up into here, we're not immediately assuming that price is going to come and take liquidity above. Why not? Well, we've broken market structure to the downside, right? So we've moved to a bearish stance. So we're not expecting a big pump up here. However, we don't discredit it, nor do we discount it. We say to ourselves, okay, where's the most likely place for price to head? Well, if price has come down here and it's taken out all of the liquidity from the lows here and it's driven into this order block, this bullish order block, right? Then if it's got that momentum, it's driving higher, we're saying, well, the chances are it's being drawn higher into this inefficiency, this fair value gap, all right? Now, if that fair value gap gets filled, great. If we get up to here and start coming out above, then we do look for liquidity above these highs, all right, especially the key liquidity here. However, we often see it, price is stalling here, and then price starts to sell off. Now, we're just left in a situation here based on liquidity. So what happened? Price came up, left liquidity resting above these highs, didn't tap it, right? Price came up, started to correct back down. What did it do? Here's a key swing low, all right? Flanked by a higher low and a higher low, right? So we're now marking this out on our daily level. What happened? Price came up, started to correct back down. Yeah, as it's doing so, it's getting drawn down towards liquidity resting below here. Now price has taken liquidity from here. Yeah, it's consolidated. Then it sets this swing higher here, right? And remember, why is it that swing higher? Because it's flanked by two lower highs. Now, price then drives down. What happens here? Takes out the liquidity below these lows, right? Drives into this, back into the order block, has this bullish move higher, leaves this swing high, yeah? And leaves this swing low. So these are now the two key areas of interest, right? Now, when we're looking at market structure, we're saying we've set a low, we've set a high, right? Now, we've set a higher low, but a lower high. We can see prices compressing within this range. So what we're doing is we're having tighter, more controlled periods of price moving from liquidity pocket to liquidity pocket. So at the moment, we're left here. Now, what else does this represent? Well, it represents one of my favorite patterns, right? Which is an inside bar pattern. So that's when we get this large candle with the secondary candle. When this candle closes, the high and low have to be completely closed within the range of this first candle. It can't sneak out, right? It can go really, really close to it, right? But it can't close or move, above or below it. What it does is this creates what's known as an inside bar pattern. Okay, you might have heard them called inside days, inside weeks, etc. This becomes the mother bar, this becomes the inside bar, and we trade them like ranges, all right? So this then becomes our range within a range. So we're going to keep this blue, right? But we're going to mark these here. And now what we're saying to ourselves is, well, when we trade a range, once we get to an extreme, yeah, as we get to up here, price runs up into this. Remember what we said before, if we see price run up to a level, yeah, we want to see price gain acceptance above that level, meaning that we want a reasonable amount of time to go past. We want to see a retest of this area, and then we want to see price progress higher, all right? Now, what we see often is that price reaches the level, deviates, comes above it, takes out liquidity above here, right? Above our inside bar, mother bar. Then if price comes back within the range, that's when we start saying to ourselves, okay, well, what is price doing back in the range? And I don't have the skills of storytelling of my good friend Trader Dank, who I recommend you guys all go and check out. Absolute legend, and tells one of the funniest stories about range trading I've ever heard. I just asked him about a guy called Johnny, and it's a story you'll never forget, right? But the principle is, you're asking yourself the question that if price is bullish here and it's ready to move higher, why has it come back in the range that it's been trying to break out of, all right? If it comes back in this range and we see the signs, we look for a pullback to here, yeah, where price breaks back in the range, or to a fair value gap and inefficiency in this area. Then we look to trade it lower, okay? And with any range, right, we're looking to trade it back to the opposite side of the range via the range EQ, the midline, right, the 0.5 level. You can set one of these up by just getting yourself a fib retracement, right, trading view panel over here, and then just add yourself a 0, a 1, and a 0.5, all right? And then that will set you up a nice little range fib. You can draw that out, and then you can see your midline there as well, all right? So my current thinking is along these lines, right? So if we're looking at that and we're saying to ourselves, okay, well, we've now got clean, clear levels, right, that we understand on here. As we zoom out even more, we can see the higher time frame levels as well. Now we see how far away these weekly levels look, right? But we keep them on there because they're going to be key draws on price. But now, in the immediate term, this is our range, right? This is where we're looking at. These are the highs and lows that we're looking to trade. So if we now drop this down onto a 4-hour chart, right, we can see here how price has come up, taken the liquidity here. See these long upside wicks here, yeah? Showing us that price isn't quite getting acceptance above this level. Now, this is a little bit uncertain. This is obviously a doji style candle, meaning that there's a little bit of uncertainty, but you could also be treated as a reversal candle. The other thing that we want to look at here is saying to ourselves, we have got the close above this level. Now, for me, it's really, really key what this candle does. This candle comes back in and closes down here. Then I'm saying to myself, okay, well, on a 4-hour scale, where is price trying to run liquidity, right? So what's drawing price higher or lower, and where's the liquidity resting? So this, and we'll do these thinner, and we will do these in, purple doesn't really stand out, does it? Let's do them in, let's go with teal, yeah? Let's make them thicker so everyone can see. So the teal lines are now our 4-hour liquidity, right? So all of a sudden we can start to see where the liquidity is starting to mass, right? We've got liquidity above here. The close of this candle makes these relative equal highs as well. So we could see a run on liquidity from there, come into the inefficiency here and then start to sell off. But what we know for a fact is that price is currently attacking this liquidity here, all right? And now we're saying, well, where are the targets? If that's our upside target, that's where we believe price is getting drawn higher, then we want to be aware of where price can be getting drawn lower, right? And that's our liquidity resting below here, and then obviously here and here. So we can see that actually liquidity resting higher here on a 4-hour scale, we've got this. We've got quite a lot of liquidity being drawn lower, right? So I'm going to draw this in as well, and I won't draw over this one, but we know this one's here. And this is obviously our inside bar pattern here as well, right? So for me, I'm saying, well, if price is coming up into this area here, we've taken the liquidity above these highs, could we possibly push from here a little bit more above here to really take out liquidity and to punish anybody that's got short too early? Then as soon as we come back and close back within here, then my interest is then trading this down to the range low via the midline of the range. All right. Now all I'm looking to do is I'm looking to take this onto lower time frames. Right. I've got this indicator on here, which is telling me about the trading sessions. I'm most active and I most like to trade the London to New York sessions. All right. I'm not very active in Asia, although Asia can often tell us or give us a hint of price action that's to come. Not really one for this webinar. But as we drop down here onto the 15-minute, right, we can see price consolidating here. Now, again, in the same veins, we can see how price is coming down and it's clearing out the sell side liquidity here. The question is, are we looking to break down here, or is price simply consolidating in this area? Yeah. If we look at this and take this from the bodies, we've got this consolidation happening here, right? And now which way is price looking to do? Is it looking to come? It's taken liquidity down here from the lows, could be looking to fuel a move higher. Personally, I'd like to see this level taken before any kind of reversal. Then if we get back within the range of the inside bar pattern, then I'm really, really confident that we're going lower. What could be drawing price lower, however, are these inefficiencies, right? So remember, we're talking about our fair value gaps. You can see we've got one here that's been pretty much filled. Can you guys see that all right? I'll make that a little shade darker, actually. There we go. But we've also got this one below it. Now, these inefficiencies, right, where the market has moved away quickly, don't really have any orders in here, right? That's because buyers were in here. The market got pushed lower, got this manipulation, if you like, below this low, which then generated for the break of structure higher. Now, lots of buyers stepping in here, or not necessarily lots of them, right, which can be a common misconception, and I shouldn't have said it like that. It's the volume that's stepping in. This could just be one massive buyer putting in hundreds of millions in orders, right, or more. But it could also be seen as large groups of buyers, right? But there's one thing for certain, that the buyers have stepped in here to such a point that price has moved up, right, and it's not found sellers until higher up, right? So you get these impulsive moves, these thin moves, which are often retraced, yeah, to rebalance the market and to gain efficiency. We saw something very similar when we had this impulse move up higher, right? What happened was we got this inefficiency, price drew down into this, right? We would look to execute this on the lower time frame, but what we would be looking for is a pattern like this, where price comes in, sweeps a low, the high that sweeps the low gets closed above, right? And then what do we look for? We then look for an inefficiency, which we get here, our fair value gap. That's where our orders go. Our stops go below this low. and then we can quite comfortably target the high of this candle, and then we know where we've got our mother bar high as well, all right? So that's what I'm looking for. I'm looking for how price is moving. And as you'll notice as we go through the different time frames, I'm not applying any different logic. All that's happening when I'm getting to an executable time frame like the 15-minute is I'm getting down here and I'm saying, okay, I'm very, very conscious of time being a factor, right? So henceforth, you can see this move was missed this morning. This is just before the London session for me. We can see, and quite often the London session will set the high or low of the day. So I'm now looking at New York and I'm saying, okay, well, if London is setting the high here, and we've got this line here, we've got our theory that maybe price moves higher to take the liquidity above this level, then I've got a nice game plan for the day. Yeah. So if I'm looking here and I'm saying to myself, okay, well, what's my game plan there? I want to see price come above here. First of all, come back below this level of liquidity. Then if we're getting back below the range here, I'm trading this first of all down to here, okay, and then down to the next point of liquidity down there, ultimately working down towards the bottom of the range, okay? So I hope that's nice and clear, guys, how we're taking that from a weekly, decanting that down onto an executable time frame, whether you can trade the 15-minute, the minute, anything like that, what you're going to see. One of the key things for me is if you're really diving into the low time frames, make sure you've got your high time frame bias, all right? Because the lower and lower you go in the time frames, you can really end up getting chopped up in these areas, convincing yourself, okay, that's the sweep, now I'm going long, or maybe, this was the sweep, the high, now I'm going short. Just make sure you've got your high time frame bias intact, and then from there, you're just looking to execute on the lower time frames, all right? So I also want to just take a quick look with you guys at ES, all right? So let's pop onto ES, which I'm sure I've got squiggles all over still from last week, but we can deal with those. Wait for trading view to catch up, guys. 1 second. Here we go. So some of our annotations from last week. So let me run you through these, guys, because they've been done in exactly the same way. Okay, and this way you can see why we kind of take some of the trades that we take and what we're looking at. So as you can see here in my trading chart, I'm looking again, key highs, key lows. On a weekly scale, we can see key highs taken out, price heads for the lows, price comes, takes out the highs here. Where does it go for? Down to sell side liquidity that's resting below these lows. This is why we were bearish up here, because we saw price get pulled up above these highs. We're saying, okay, if we come back below, which we did on a daily scale, then we're looking to trade this lower. So forgive the mess on this a bit, guys, but what I'll do is rather than annotating this all up, I'll just run you through, give you my current thinking, and obviously what I was sharing in December as well. So the reason we were bullish here, right, is we've taken out the sell side liquidity down here, right? We see this long downside wick. This is designed to sweep any late liquidity, anything that's under these lows. Bearish engulfing candle. For me, I'm then expecting price to go and find liquidity higher up. That makes sense in two areas. One is this naked high above here. And secondly, is this order block in here, all right? And do that in red to show that that's where we expect that to get rejected. We notice again, when we're looking for confluence in these areas, price drives up into these orders here, above this resting liquidity, and then we get our rejection. So what does that mean for current price? Well, based on that theory, right, then I'm saying to myself, okay, if I've seen liquidity get taken here, drive lower, take liquidity here, now drive higher and take liquidity above here, I'm now looking for liquidity to get taken lower down, all right? Now, on a weekly scale, I've got my liquidity levels marked up here and here, right? I'd also be aware of any orders resting in here. But for now, this is nice and clean, and I want to drop down onto a daily. So here on a daily scale, excuse me, we can see we've got the top of our order block here, right? So this high volume candle where we led to this large breakout here, expecting some orders to be residing in here. What happened? Price came down into this area, dipped down into this order block, respected the equilibrium of it, the 50%. And then we got this bullish reaction higher, all right? Now, what I would have wanted to see here in an ideal scenario is get this reaction, right? We get this nice candle here, this long downside wick, take out the liquidity below here, and then price starts to drive higher. However, when we then get this bearish engulfing candle here and price starts to come back down, it's showing us that there's not really a lot of momentum on the bullish side, right, in use to trade that higher. So if we're looking at this in respects to that, you can get price driving down. Now we've come back up. This fair value gap Yeah, so this inefficiency here was the draw for price higher. We didn't quite get there, and prices then started to sell off again. For me, it's showing weakness here, right? And we've got key lows below here, right? And then we've also got these below here, and then ultimately our weekly liquidity resting below here. So in my mind, although not confirmed, I'm leaning more bullish than bearish, but I did expect some kind of bullish reaction down here, right? We get this bullish engulfing candle. I'm someone that pays a lot of attention to candlesticks, all right? So we get this bullish engulfing candle. I was looking for a correction into the golden zone, the golden pocket, right, or the 618 level on the fib, which I'll show you as we move down the time frames. But you can see here exactly the same thing going on, right? Just looking for the key highs and lows, and then looking for the inefficiencies that can be drawing price, okay? So as we now drop this onto a 4 hour, quick question here from Gold Max, which broker do you use to trade ES, please? Yeah, so I don't really like recommending Forex or index brokers purely because it very much depends what country you live in. It very much depends, well, it depends on a number of things, really. So I've used a number of them over here. What I would just suggest is go and find good sites that review brokers in your country, in your region, and they will have some really, really insightful information. Areas like fees, sometimes you want discount brokers, sometimes you don't. You can get other setups, people like eToro, for example, who are fee-free but kind of hide their fees in other areas. Pepperstone, who are very, very good as well. But there are a lot of them. But with this, it's very, very different to crypto. So what I'd recommend is always kind of getting on there, doing some really, really deep research on that, finding out what works in your area, in your jurisdiction, because some elements are going to be restricted. All right, but then making sure that you engage with them, you find reviews on them, and you understand their fee structure. It's very different when you're trading these kind of contracts because you're normally paying a fee per contract, right, that you're opening, rather than in crypto. Obviously, the fees are generated a little bit differently. But you can also, yeah, Burn comes with a really good point on here as well. You can trade ES on a platform like Prime XBT where you can use your crypto as collateral. All right, so that's definitely a good way to ease into it. But if you're looking for a broker like this, FOMC, very good actually, Pepperstone. But there are, again, I'm based in London, right? So there's different ones that will be good for me that aren't so good for others. Yeah, so yeah, NASDAQ as well, gold, oil, Forex pairs. You get a real selection of baskets on there. So really, really good heads up there from Bernd. That's a really good way to enter into it. But if you're looking for an actual proper broker, right, and you intend to trade these things in that respect, then absolutely, absolutely get on there and just make sure that you're doing a lot of your own research in that and you understand how the fees are constructed. All right. Superb. Thanks, Fred. And Uriel, thank you very much as well, bud. So we're in here. Now, I coloured this up last week, week before, maybe even longer ago than that, actually. Sorry, when were we here? So this relates to an ICT teaching concept, right, which is discount and premium. So I'm looking this as a range, right? I'm taking this as the range, and the top 50% is premium and the bottom is discount, right? So I want to be short from premium and I want to be long from discount. Okay, you're more than welcome, Max. Very welcome, mate. So basically, that's what's affecting my thinking. I'm thinking, okay, if I was smart money, if I was institutional money, would I be looking to long here? No. Why wouldn't I be looking to long here? Because we've got resting liquidity up here. We've got resting liquidity above here. Where does my stop naturally have to go? Somewhere under here. I've got a terrible risk to reward, right? So from up here, when opportunities present themselves to go short, then we can look for shorting opportunities here. When long opportunities come to us in here, then this is when we look to go long. Now, obviously, we're looking at this on a 4-hour scale, right? So we don't have to trade it on a 4-hour scale. We can drop down onto lower time frames. But basically, the reason that I was looking for this reaction here is as we came back up, we've come down, taking out liquidity down here. We've driven into a, which I'll show you in a little while, into an hourly order block here. We get these candles emerge here, showing that the market is starting to halt. We then get this impulse move higher, and we've taken out liquidity above these highs, right? Now, if we're shifting to a bullish state of play, right, then my natural expectation is for price to correct back down, yeah, to generate liquidity before moving higher. Henceforth, why the Fibonacci is drawn, right? So from this low to this high, right, from this impulse move up, we target the 618. The reason I've got this blue box here is because I like to delete the Fibonacci when we're there. So I know within this box we're looking to play this. We caught a very late short trade, which we'll look on the lower time frame, into this level, right? Again, showing that just because if you've got your high time frame bias, if you're expecting a corrective move here, as long as you've got your targets, there's more than enough room in here for day trades. Okay, I would always recommend trading with the trend. You've got a much higher chance of catching bigger moves, right? But if you're in these kind of situations and price is kind of ranging or compressing, or not in the largest of moving or trending market, not a range, then you can be a little bit more bullish with your pullbacks. But for me here, I quite like trading these corrective moves because where the market's searching for liquidity, you get plenty of pips to get in, all right? But this was our key area in the blue box. Price corrected into here. What happened? Took out the liquidity below these lows, all right? Came into any orders that would be resting in here. And then we've had this bullish move higher. So how does that look on the lower time frames? Right, this is something that I shared for anybody that's Nest members here. This is all on my private channel. You can go and grab all of this. This was all shared recently. That we've drawn ourselves down into this area here. We've got our high time frame liquidity level, right? We've got our hourly order block, which we can see just tags into price here. And then I'm saying to myself, okay, right, within the time zone, we've got London here, right? So this is just a little bit right at the beginning of the London session. We then get another opportunity here in the New York-London crossover. And very simply, I'm looking for opportunities to get in here to trade to key targets. So this is target number one. We can see our price move through that aggressively, so we didn't need to cash out anything there. And then ultimately our target number two up here, which is where we cleared out our position. Now, in terms of entries, you'll be able to see this on the 15-minute, although they get executed on a lower time frame. For me, it's always the same with an entry. I'm looking for a low to be swept. This is for a bullish term, obviously. Low to be swept, which we can see happened here. Right, this was the 5-minute entry, but we won't drop down to that time frame. You can see it clearly here on the 15-minute as well. Now, came down, took liquidity below these lows, came and closed above this high on a smaller time frame, on a lower time frame. We can see we wicked this one here, right? But even if we had done, we get the close above, right? This was our entry on a 5-minute scale. However, if you were trading this on a 15-minute scale, what you'd be looking to do is you're waiting for an impulse move through the level, showing us the price is getting ready to move. Don't FOMO in there. You wait for a retest of this line, right? Which is just a name that I made up, but I call it a breaker line. Right, that's when the market's shown us that it's ready to move high. You can enter on this line here, or what you're looking to do, and I'll often trade it this way, is I'm looking for the fair value gap that's left, right? So we can see the gap between here and here, yeah? See that little gap? Let me mark this in with this actually. All right, you can see impulse move higher, yeah? So we get that big push higher. In that impulse move, we've got a gap between here and here. Quite simply, our orders go in here, right? And our stop loss goes underneath this swing low, all right? Now, you would normally, with a fair value gap as well, you would take the low of the origin candle, which is this one, but as that low is lower, that's where you would have it. If you wanted to be super safe, you would put it below this swing low here. And then the key is just making sure that you understand your targets, right? So like we said earlier, we don't want to get greedy. We've got key targets, liquidity resting above here and here. We don't know if the market's going to just reject here, all right? But a good indication when we get here is we get that powerful move up, and then once again, what happens? Price retraces into this inefficiency, so we can see here, pretty much fills that fair value gap before moving higher. This was our secondary entry here, all right? This is our breaker line. Price punches up, comes back into this inefficiency here, and then moves higher, all right? So with that in mind, let's just drop back to a slightly higher time frame. That's how we would look to execute those moves, all right? That's how we do execute those moves. And now we're saying to ourselves, very similar to like we're looking at with Bitcoin, what's the current state of play? What are we looking at? Well, we've got this fair value gap up here. That's drawing price higher, all right? This blue box here represents a higher time frame Fibonacci. So we take that from the high of that move down to the low. I'm going to change this away from a range fib, and I'm going to just put this on my traditional fib. right? And we can see up here, if price is coming up, we're likely to attack this area here, the fair value gap. And then we've got our 618 here, sat right on this daily order block. Yeah? So you see how we can piece this together in terms of confluence. So why would price reject here? Well, because we've got the 618, algorithms are going to be using that, other traders are going to be using that to shut down positions as well. As price drives higher, at this point, we've then taken out this fair value gap. Are we then simply driving into an area? We can see it with this green box here, which signifies the top of the 618 down to the 0.5. This is a key point of interest. We come and take all that liquidity. I would personally be expecting at least a corrective move here, back down to here. Then if it looks to move higher, we've got our key target above us. We just shut that off so it's a bit cleaner. We know where we've got our resting liquidity. We've got it here, we've got it resting above here, and we've got the rest annotated up, okay? So in terms of what I'm looking at the moment, we can see that we've got the fair value gap here drawing price higher. I still think that we draw into this, okay? So we're still, price is drawing higher. Maybe we take out the stops above here. If we then get any kind of breakdown, I'm then looking for price to trade into the lows of this move, okay? So one more thing to cover with you guys as well. I'm not going to look at FX today. I'll probably do a little bit more on FX on Wednesday with you all right, for anybody that's interested. But one thing I do want to just take a quick look at is the DXY, all right, the dollar index. This is fantastic when you're trading currencies, all right, obviously when you're trading currencies that are counter-correlated to the dollar, so euro dollar, pound dollar, dollar yen, etc. All right, let me just pop this out onto a higher time frame as well. Now, this was significant for me. This is January 2017 high, right, which when we zoom back, is all the way back here, all right? So this, the high from January 2017. Why is that significant? Because that was resistance, resistance, flipped it, price purged below, filled this inefficiency, came back above, and then look at this. Retest pretty much, but then this dip into the retest here to take out that, we had this huge impulse move higher. It then came of significance again when we had 1-2 weekly rejections at this level. It was holding price. We now, however, have closed below this level. Yeah. And my opinion is that we're now driving into this, which is a monthly order block. See this OBM over there. So now I think that that becomes the most realistic place for price to be driving into for the DXY. Let's swift straight to a daily. And what we can see here on a daily is that price has come down and taken out these lows, right? So we'll do this in blue again to stick with our framing of levels on the daily. So as price is coming down, it's attacking the lows. Now, what you'll notice in a downtrend on any asset, even with this, right, is that as price is coming down, it's leaving these highs, right? Forgive the rubbish line drawing, right? Well, that one's just terrible. Right, it's leaving these highs, naked highs, right? And it's not taking them out. Remember our rule on swing highs, right? So we've got all liquidity resting above all these highs. Now, what you'll notice is that the price is bearishly driving downwards from this point, right? But what we're absolutely doing is taking out these lows. Lows taken, and now this low has been taken as well, right? Does that make sense? So when you're looking for how price is moving, the momentum, and it's taking out these lows, driving lower, correcting back up, filling inefficiencies, like we've got this volume gap here, all right? And then it's continuing lower. Where to? To attack the sell side liquidity, right? What happens? Price draws up into here. Where's it drawing up to? The orders within here, before it then rejects again, and it sells off looking for sell side liquidity. Now, what we need to remember here, however, is that with the DXY, we've now taken liquidity here, right? So our question is this just another correction higher? Yeah, maybe into the orders residing in here, or maybe even a run on these stops above here before price purges lower to take out the key liquidity at this level down here, which is our monthly order block, all right? So the reason for caution across risk assets at the moment, in my opinion, is that, yes, we've had this close below, right, which is key here, and obviously this was on a weekly scale we're looking at. It's closed below on a daily scale, but not on a weekly. So now it's closed back below here, recently, that is, by the way, not historically. So this becomes a key area of interest we start getting bullish momentum building here, price starts on the lower time frames, drop it in, say 4 hour. Right, if we start to see price getting bullish, yeah, and especially if we reclaim the January 2017 high, then I think we're looking for bearish pressure on risk assets. All right. So that's what I'm looking at here. I'm not obviously just using it for Forex. Basically, we've got a counter correlated asset here with Bitcoin and risk assets. Same with the ES. When price is typically drawing down, like we see here, right, we normally see risk assets do quite well, right? So like the ES, for example, which we've seen obviously a nice bit of a pump in that recently. Obviously, the higher the time frame, the better the correlation that you can look. It's not something that's in place all the time. You always have to stay sharp to these changes and never rely on them, but always want to kind of practice them in. Now, I just wanted to leave you guys with one final thing as well heading into the new year. I think whether you need a date or you don't need a date, I think it provides everyone a good opportunity for a fresh start. Now, I know people out there, and I do agree with them, that we shouldn't need a date to make change, right? But I do think it helps some people. I think if it helps you, good luck to you. Don't be put off what other people said. Take this opportunity to review what you're doing, look and see how effectively you're working, how efficiently you're working. Most of you guys will be doing this around having other jobs. And I hear a lot of people out there say, oh, it's impossible to become a trader when you've got another job. Most traders I know that have become professional did it whilst having other jobs, right? But they are some of the most dedicated and hardworking people I've ever known. All I would say is this. I would say find yourself good people, find yourself a good community. Obviously, I highly recommend the Bird Nest. If it's something that's of interest to you guys, you can find information down in the description below. But this isn't just to kind of put that across. It's purely to say to you guys, whatever that community is, find people you can work alongside, find people you can learn from, good people, proven traders, professional traders, all right? And find that community that's supportive, that helps you gestate, helps you build, right? Because you've got a whole fresh year ahead of you now. I believe it's going to be a very turbulent one in the markets. I can't see the geopolitical situation improving greatly. We're going to see supply chain issues again, I believe, with China. Inflation is still rearing its ugly head, right? So there's still going to be problems with that, and interest rates are going to continue to rise. But within that, you can frame the market for yourself. You can understand what that means and how that translates, and you can use that to your advantage. And one of the other things that you should really do as well, or should do, what I personally do, is I use any downtime to make sure that I'm studying, right? And I study all kinds of stuff, right? Traditional market method techniques, if I'm introduced to new traders. Recently, SC introduced me to a British chap called Trader Dante, who I found really, really fascinating. I get my head into his stuff in my downtime. I restudy everything from ICT concepts. I go on there and I study Bird's webinars because, you know, he is genuinely one of the most fascinating characters and one of the smartest guys and traders that you could meet. There's literally a few thousand CMT level qualified traders in the world. He's the only one in Poland and one of the only ones in Eastern Europe. So find good people, learn from those good people, but keep your individuality. Understand how you want to trade, how you want to grow, what type of trader you are, and ignore all the noise on social media, Twitter, all the rest of it. Just focus heavily on your niche and go deep into that niche, all right? And as Uriel says here, and I couldn't agree more, study, invest your time, and grow, right? For you people on here that really want to achieve this, I know there's loads of people that just pop on here just to see the market updates, and which you're all very, very welcome in my world. You always will be. But if you want to really take this seriously and you want to push for your financial freedom, then you've got no better opportunity or catalyst to start now. All right. And with that in mind, I'm really getting myself back into a powerful routine this year. I've got a beautiful dog who is just my life. She's a husky. She's gorgeous. I take her out walking first thing every morning. Get up with the sun, get out, get her walking. Fortunate to live just on the outskirts of London. We've got a beautiful area of beach and waterfront by us just at the mouth of the Thames. We go down there every morning, rain or shine, get back in, shower, fresh, yogurt, fresh berries, or something light to eat in the morning, like some eggs. Get yourself pumped, get yourself in a good position, sit down at the charts when you're ready to go, right? If you don't have that opportunity, right, then you're in your work routine. Just make sure that you're sleeping well, you're eating well, and that you're keeping your mind clear. It's better to study less hours in a day but make those hours more effective than it is doing it elsewhere. I came from running several businesses when I decided to take my journey as a trader professional, and doing that I sold my businesses, I stepped down from any management roles, I took away that safety net that I had of very, very good income at the time, because I wanted my focus to be purely on this. And I bought myself the opportunity to, bearing in mind I'd been a student of the market for a number of years, to then really double down, work with some exceptional mentors, work with a great group of people, really hone my skills and take it to a next level. So if that's the opportunity any of you guys have, please take it. I'm around. You can find me at the Nest. You can find me on Twitter, BC_Richfield. If you've got any questions, do come and get in touch. More than happy to share any part of my journey with you, and I hope you guys find this stuff interesting. So I managed to rattle on for an hour again. That seems to be the sweet spot these days. I will try and keep the future ones a little bit shorter, guys. But Burned, Uriel, Noz Industry, Goldmax, John, Melling, Manny, who else we have? AU, Emblaze, Long Resistance, Short Support, love that. Annika, just everybody that jumped on the stream today. I'm sorry if I've missed you out. Huge thanks and lots of love to you guys. Have a fantastic year. For everybody that's watching this on Catch Up and everybody else that was on the stream today as well. Thank you so much for stopping by. Like I say, these are just my thoughts on the market. If it's anything that ever helps you guys out, that's a blessing for me. I'm wishing you all an amazing 2023. Really make it everything it can be. Make the most of your life. Be healthy. Be smart. And chase your dreams, guys. It sounds really cheesy and that, right? But life's too short to not do things you want to do, all right? So if there's any way I can help and inspire you into doing that, do get in touch. Come and catch us over at the Nest. If you're not already part of that, you can get some free trials. There's all kinds of deals and offers going on at the moment. It'd be a pleasure to see you over there. Have a fantastic week, everyone, and I'll catch you again on Wednesday.